You know that feeling, right? If you're in the learning and development world, it's that constant nagging pressure, the need to prove that all the training you're working on is actually worth the investment. Well, today, let's dive right into that big challenge, the never-ending quest to measure the value of employee training.
It really does feel like a race, doesn't it? Every business out there is chasing some way to prove their training is paying off. But it feels like the finish line is always moving. And honestly, nobody can seem to agree on what winning even looks like in the first place. So that gets us to the absolute core question we're digging into here. How do you actually do it? How do you prove, in a way that gets everyone from the CFO to a department head nodding along, that your training is truly valuable?
Okay, so let's start with that pressure, because it is immense. L&D pros are constantly being asked to justify their budgets, and let's be honest, sometimes their very existence, by linking what they do to the company's bottom line. It's a really high-stakes game.
And for years, the so-called answer, the gold standard for measuring all this, has been return on investment, or ROI. But as we're about to find out, this gold standard might be a little more like gold plating, kind of shiny on the outside, but hiding some pretty big flaws underneath.
All right, let's just make sure we're on the same page. The textbook definition of ROI is about as straightforward as it gets. It's a way to measure how effective an investment was. Positive number, you made money. Negative number, you lost it. Simple, right?
And on paper, wow, it looks so clean and scientific. You've got this pure math formula. Take your benefits, subtract your costs, divide by the costs, and boom, you get a percentage. It seems so objective, so perfect. But let's take a closer look.
Because this is right where the formula starts to get messy. What exactly are net program benefits? I mean, sure, you can point to things like increased productivity, but how do you put a dollar amount on better morale or stronger teamwork? How do you turn those incredibly important but intangible things into cold, hard cash? It gets murky really, really fast.
And hey, it's not just the benefits side that's a problem. What about the costs? Yeah, you can track the obvious expenses, but what about the cost of an employee's time while they're sitting in that training instead of doing their job? Are we really capturing the full true cost with any kind of accuracy? Probably not.
So because of all these problems with ROI, a new contender has sort of stepped into the ring. Return on expectations, or ROE. The big idea here is to shift our focus away from just dollars and cents and move it towards something much more holistic: outcomes.
So here's the difference in a nutshell. ROI asks a purely financial question. Did we make money? But ROE asks a strategic one. Did this training actually deliver what our stakeholders wanted and expected? It's a subtle change, but it's a really powerful one.
Let's really break this down. ROI is all about that financial return, measured by stuff you can count, like cost savings. Its big strength, you get a clear number. But its massive limitation is that it completely ignores those intangible benefits, like employee engagement. Now, ROE is all about meeting expectations and capturing that bigger, non-financial picture. The catch? You have to be absolutely crystal clear on what those expectations are from the very beginning.
So, you might be thinking, great, ROE is the simple answer. Well, not so fast. Here's the twist. ROE isn't a perfect, easy fix. It often comes with its own complicated formulas trying to put numbers on subjective things, so it can be just as tricky as trying to put a price tag on morale.
So we've got this big debate raging on, ROI versus ROE, and all this pressure to calculate something. And that brings us to the big reveal of this explainer, something that's kind of an open secret in the industry.
With all this talk, all this chasing, all this pressure, who's actually doing it? Who is really out there winning this race and successfully calculating ROI for all their training programs?
Well, the answer might just surprise you.
Here is the big open secret of the training world.
27%. That's it. That's the number. So what does that number mean? It means that despite all the noise, despite all the pressure, almost nobody is actually doing the math. On average, only about a quarter of organizations even attempt to collect ROI metrics for their training. We spend all this time talking about it, but as an industry, we're barely doing it. And if you look at the data by company size, the story gets even more interesting. For both small and medium-sized organizations, more companies are actually trying to measure return on expectations than they are ROI. It suggests that deep down, a lot of us are already leaning towards measuring outcomes instead of just chasing a financial number.
Okay, so what does this all mean?
If hardly anyone is actually calculating ROI, what should we be doing instead? This is a moment where we need to stop running the race and start rethinking the entire racetrack.
You know, maybe we've been so focused on the calculation that we've missed the entire point. Maybe arriving at a perfect percentage isn't the goal at all. If trying to get that perfect number is the wrong goal, then what's the right one?
The right goal, the new focus, is all about shifting from calculation to strategic alignment. That means getting incredibly clear on what stakeholders expect before you even build a single piece of training. It means you measure success by the actual impact on the business, not just by plugging numbers into a formula. At the end of the day, it's about making sure your training is a real solution to a real business need.
And that leaves us with one final thought. We started this whole thing talking about a race, but if the finish line isn't a perfect formula, then what on earth should we be chasing instead? Perhaps the real prize isn't a number at all, but a conversation, a strategic alignment that proves your value long before anyone ever asks you to calculate it.